Section 3. Documentation required for financing. Now the real work begins. In the last section, we learned why obtaining a pre-approval before shopping for a home helps create stronger offers, better prepares buyers for the financing process, and reduces the chances of unexpected problems after going under contract. Once your buyer has found the perfect home and the seller has accepted the offer, the lender begins collecting and verifying the documentation needed to move the loan toward final approval. This is where many buyers are surprised. Some assume they already provided everything the lender needs during pre-approval. Others become frustrated when the lender asks for additional documents, updated bank statements, or another pay stub just days before closing. The truth is that documentation is an ongoing process throughout the transaction. As a real estate professional, you are not responsible for collecting your client's financial documents or reviewing their personal information. However, understanding why lenders request certain documents allows you to better prepare your clients, reduce unnecessary delays, and keep the purchase contract moving toward a successful closing. Why documentation matters. When a lender approves a mortgage, they are making a significant financial commitment. Before they can lend hundreds of thousands of dollars, they must verify that the buyer has both the ability and the financial capacity to repay the loan. That means every piece of information provided by the buyer must be verified. Sometimes that verification is simple. Other times, it requires additional explanations or updated documentation. The more organized your buyer is, the smoother this part of the transaction usually becomes. Income verification. One of the first things a lender verifies is the buyer's income. For buyers who receive a regular paycheck, this usually includes recent pay stubs, W-2 forms, and employment verification. The lender wants to confirm that the buyer's income is stable and likely to continue. For self-employed buyers, the process is often more detailed. Business owners may need to provide personal and business tax returns, profit and loss statements, and additional documentation explaining fluctuations in income. It is not unusual for a self-employed buyer who believes they earn a substantial income to qualify for less than expected, because lenders often rely on taxable income rather than gross business revenue. Arizona broker tip: if you know your buyer is self-employed, encourage them to speak with their lender as early as possible. Self-employed borrowers often require additional documentation, and beginning that process early can help avoid delays after the contract is accepted. Asset verification. The lender must also verify that the buyer has enough funds to complete the transaction. This typically includes reviewing checking accounts, savings accounts, investment accounts, or retirement funds that will be used for the down payment and closing costs. One question buyers often ask is why the lender wants an explanation for a large deposit. The answer is simple. Lenders must verify where the money came from. If a buyer suddenly deposits $15,000 into a bank account shortly before closing, the lender may ask whether those funds were a gift, a bonus, the sale of another asset, or borrowed money. Providing that explanation early helps keep underwriting moving forward. Credit and debt review. Although the buyer's credit was reviewed during pre-approval, the lender continues evaluating the buyer's financial profile throughout the transaction. That means buyers should avoid opening new credit accounts, financing furniture, purchasing a vehicle, or making other significant financial changes before closing. Even a seemingly small decision can change the buyer's debt-to-income ratio and affect final loan approval. Real-world example. Jason and Melissa were excited to furnish their new home before moving in. They visited a furniture store and accepted a promotional financing offer with no payments for 12 months. What they didn't realize was that the new credit account appeared on their credit report before closing. When the lender completed the final credit review, the additional debt required further underwriting. Fortunately, the loan was still approved, but the closing had to be delayed several days while the lender updated the file. A simple purchase created unnecessary stress that could have been avoided by waiting until after closing. Technology has made the process easier. Years ago, buyers often delivered stacks of paper documents to their lender. Today, much of the documentation process happens electronically. Secure document portals allow buyers to upload financial documents safely. Employment can often be verified electronically, and many lenders securely verify bank account information through approved financial verification services. While technology has made the process faster, it has not eliminated the need for accurate documentation. If information changes during escrow, the lender may still request updated documents before issuing final approval. Your role as the real estate professional, one of the best things you can do for your clients, is set realistic expectations. Explain that receiving requests for additional documentation does not necessarily mean something is wrong. In many cases, it simply means the lender is completing the normal underwriting process. Encourage buyers to respond quickly to lender requests. Keep communication open and avoid making major financial decisions until after closing. Although you should never review or interpret your client's financial documents, understanding the documentation process allows you to anticipate potential delays and better coordinate everyone involved in the transaction. Contract law connection. Documentation is more than paperwork. It directly affects the buyer's ability to perform under the Arizona Residential Resale Real Estate Purchase Contract. Delays in providing requested documentation can delay loan approval, affect contractual deadlines, and in some situations, place the transaction at risk. By helping buyers understand the importance of responding promptly to lender requests, Arizona real estate professionals reduce financing delays, improve communication, and better protect the public. Online discussion question 1. Why do lenders continue requesting documents after a buyer has already been pre-approved? Answer: because lenders must verify that the buyer's financial information remains accurate throughout the transaction. Updated pay stubs, bank statements, or explanations for financial changes help ensure the buyer still qualifies for the loan before closing. Question 2. Why should buyers avoid opening new credit accounts while they are under contract? Answer: new debt can change the buyer's debt-to-income ratio, affect loan qualification, delay underwriting, or even prevent final loan approval. Question 3. What is the real estate professional's role in the documentation process? Answer: the real estate professional should educate buyers about the importance of responding promptly to lender requests, encourage communication with the lender, manage contract timelines, and avoid providing financial or lending advice outside the scope of their license.